Good day to one and all. This is Dr. Sivaraman of iknowindices.com. We are into the new year 2017. So I was not able to present my earlier webinar last week because of my other engagements. So wish you all happy new year. And today we are on 10th of January. I'll be giving the forecast for this week, 9th to 13th of January. As I mentioned during that of the last month of December, that the yearly trend reversal is expected to continue during the month of December and January. Till end of this week, we could come across more of USD gaining move in this process. And the players are expected to make the market more uncertain during that of the yearly trend reversal. How they can make it uncertain? By making sudden rise and sudden drop, you will come across the market is unpredictable. You know that last week there was a announcement of non-farm payroll. The payroll was less than expected, but still they made the USD gaining move, and that would have given a lot of surprise to that of the traders. And this is the way the players make invariably the uncertainty in the market. This is primarily in order to induce the traders to go in for a distress trade for the year beginning. What is the advantage of inducing the traders to take unfavorable positions? Because the players need to accumulate more positions at the lowest level by creating a lot of uncertainty and creating the feel that the US dollar is going to be the king during the new year. Then afterwards, once the traders think that there is no point in buying euro and GBP and they are making continuously drop, it is better to switch to some of the currencies or to that of the US dollar. And so they give the market sentiment that way and accumulate all the sell positions of other majors by that of the traders and the institutions. And then later on, they give different stories. And from next week, we could come across the market is trying to make US dollar weakening move. And again, during that of the last week of January, they will try to make the US dollar gaining move and then continue the upward move in the case of euro and GBP for another 3 months. So that will give a clear picture to that of the traders that why they made the drop in the month of December and January, mainly to accumulate the positions. And there is no bearishness with regard to these currencies. And if you look into that of the market now, euro and GBP, they are dropped. Along with that, they have also dropped USD. So this is the way they make the contrarian moves in the market. And by making such contrarian move, they are able to bring down all the N crosses and also the other crosses to accumulate. Then later on, they gain the levels. So this is what you come across. So I am here to give you the forecast for this week, Monday to Friday, how exactly the market is expected to behave in the case of 4 majors and 2 commodity pairs. And that is based on the derived forecast. So my trading system consists of the derived forecast, then the market reading and live market analysis in order to take the positions. And if after taking the positions, in the event if the market goes against our expectations, and there is no point in blaming the forecast. Instead, we should be able to use our trading strategy to earn money from the other market. And that is why I insist upon the trading strategy, so that you'll be able to consistently earn money from the other market. There is no blame game. And there is no point in blaming the forecast or any other event. And there is no point in telling simply that the market is crazy. And by that, we don't earn money, because we come to that market mainly to earn money And in that process, we have to focus on that. Now, the forecast for this particular week. This is the trend reversal time. The yearly trend reversal prevailed during the month of December and January. You have noticed that how exactly they made the quick upward and the downward move, and invariably, if you have noticed, in the month of December and early part of January, they made wide range swings in the market, making about 200, 300 pips rise and 200, 300 pips drop. This sort of moves they have done it, and this is mainly wide range swing. They do it as a volatile move in order to induce the traders to go in for their distress trade. So after the gain, if the traders buy, they drop the market. After the drop, if the traders sell, they gain the market. So this way, they create the uncertainty to the traders. And people might think that it is trending, but it will be invariably trend reversal moves every time during that of the yearly trend reversal. When compared to that of the monthly trend reversal, the yearly trend reversal, the amplitude of the swings will be higher. That is gaining about 200, 300 pips on the upside and 200, 300 pips on the downside will be the type of move we'll come across during that of the yearly trend reversal. During that of the monthly trend reversal, they may make about 100, 150 pips maximum an upward and the downward move during that of the last week and the first week of the new month. But this time, this is the yearly trend reversal. So we need to watch carefully, and we can only focus to do on swing trades. And also keep in mind, the players create the market sentiment and act against that of the traders. And that is why you find the market looks uncertain. Now coming to that of the forecast. So yesterday was 9th of January. They made the swing and form of move and then started gaining the level. And then today they are also continue to gain the level in the case of the euro nominally. But in the case of GBP, they are just holding around that of the low. And then they are expected to make a swing and slide move. During that of the European session, you could come across Europe would make the slide, but GBP they could hold or make a brief downward stop and start gaining the levels during that of the US session. Then again on Wednesday, they are expected to make the swing and rise during that of the Japanese session tomorrow, and then slide during that of the European session, and then gain more levels during that of the US session. After gaining more levels on Thursday, suddenly on Thursday US session, they are expected to make a big drop, and that will be a surprise to that of the unexpected move to that of the traders. When they think that the market is going to recover, they will simply make a drop. And then on Friday, they are expected to make the swing and rise during that of the Japanese session. And then the yearly trend reversal is expected to continue till that of next week. The levels. So most likely the gaining moves could be seen from that of 19th of January. Till such time, they are expected to hold the market around that of the low. So don't think that they are going to make a big upward or a big downward move, and they are expected to make wide range swings. So in that process, we can only do the swing trades in the market. So if you've got any doubt, you can ask me the questions in the question answer window. I'll be willing to answer those questions. Now, after that of the forecast, I'll be now talking about that of the range in which the currencies are expected to swing during this particular week. And if you have noticed that in the month of December, they have been making a downward move from that of 1.10 level to 1.05 area, and then now they are slowly started gaining the levels from that of 1.05 to 1.08 level to start with, and then they will make one more slide next week, early next week, and then start gaining big. And in the case of GBP, they are trying to create uncertainty with regard to the British exit concepts, and then slowly, after breaching 1.21 briefly, they could gain the levels suddenly in the case of GBP. And you keep in mind that they are not going to kill the currency GBP, and it will be tradable, and the players are expected to continue to use GBP to create the market sentiments. Then in the case of yen, they made the drop from that of 118 to that of 115 now, and then they are expected to gain back the levels to that of 118, and that is how the swings are expected to be. And in the case of CHF, they could come down a little bit below that of 1.01 level and then start gaining the levels again to 1.02 area. And Canadian dollar, they are expected to gain the levels to that 1.34 level and start making the slide. Now holding around that below 1.32, and they are expected to go up again. And the case of Australian dollar, they have just done the lower level consolidation, and slowly they are expected to gain the levels. In all, you will come across that some currencies might be making the US dollar gaining move, certain other currencies might be making US dollar weakening move as contrarian move. If you look into the live market, you'll be able to see that euro is showing a net change of 34 pips positive net change. So that means it has gained about 34 pips from that of yesterday's close. And in the case of USD yen, it has dropped about 50 pips. So that means it is USD weakening move. In the case of euro also USD weakening move. But in the case of GBP, it is showing 7 pips negative net change as the USD weight 21. So that is the USD weakening move. And also Canadian dollar, they are making a nominal USD weakening move by showing a negative net change in a denominator currency. Then Australian dollar is showing a nominal positive net change of 16 pips. So you find the contrarian move prevails. Euro is showing the USD weakening move, and GBP is showing USD gaining move. That sort of moves they are doing it in the market, mainly to handle the crosses during that of the mid session. So this is the expected range in which they are expected to make the swings in the market, and try to watch and try to focus on the swing trades during this particular week. Now we'll do the market reading. I noted down yesterday the initial lows and the highs, and also today's initial lows and the highs in the market. If we look into that, euro is shown the low as 1.0575, and then the high was initially around 1.0613, and they made a brief upward stop into 1.0627 and then come below that of 1.0613. So they are likely to make a downward stop and below that of 1.0575 and then start gaining the levels. In the case of GBP, 1.2136 is the low, 1.2175 is the high. 2175 they breached and went up to 2180 and started coming down to that of the low. They are expected to make a brief downward stop and then go up. This they do it as a wide range swing in order to increase the spread between the low and the high, and then subsequently they will make the nominal trending move for intraday trades. Then in the case of USD yen, 115.49 was the initial low. They just breached and came down to 115.20 and come above that 115.49 and trading around 115.54 after a brief downward stop, and they are likely to breach the high and go above. Then in the case of CHF, 1.0122 is the initial low. They just breached it and came down to 1.0111 and holding above that of 1.0122, indicating that they will gain the level as a contrarian move. And also, when euro is making the slide, USD CHF, they will make the gain as the USD gaining move, but at that time, GBP is expected to gain the level as a contrarian move. That's what they are trying to do it. So they do the early downward stopping in the case of GBP, and later on they make the downward stopping in the case of Euro in order to handle Euro and GBP in different time frames. So in the case of CHF, they are likely to breach the high and go down. Then in the case of Canadian dollar, 1.3204 is the initial high. They just breached it and came down to 1.3198 and come above that of 1.3204, indicating that they will gain the level. And the high is 1.3236. They are expected to breach the high and go above. So it all indicates that they are going to make the USD gaining move again in most of the currencies. Then in the case of Australian dollar, 0.7289 is the low, 0.7384 is the high. They just made a brief 1 pip upward stop and come below, and indicating that they could make a downward move to start with as a wide range swing in the case of Australian dollar, and then start gaining the level later on during the US session. So in the case of Euro, they just breached the upward initial high and then come down. The case of GBP, they made the brief upward stop it near that of the initial high and come down. In the case of yen, they made a downward stop and going up. In the case of CHF, they made the downward stop and going up. Canadian dollar also, they made a downward stop and going up. Australian dollar, they made a brief upward stop and coming down. So in all, they are expected to make the USD gaining move till that of the European session and then start gaining the levels. So watch carefully, and when they come closer to the low, you can take the buy positions. So the recommendation could be you can take a buy near that of the low set for the day, 1.0575, with a stop at 1.0540. Sorry, it should be 1.05. 1.0530 as the sell stop, and then when they gain the level, you can book profit around 1.0655. Then in the case of GBP, when they come lower, now they are just making a downward move, 1.2165 or 2150 level, you can take a buy, and 1.2230 they will show during that of the European session. When Euro is making the slide, they will make the gain in the case of GBP. Then you can keep the sell stop at 1.2130. Then in the case of yen, you can take a buy around 115.50, and then they will start gaining the level and keep 115 as the sell stop. So these are all the recommended trades. You can try it in your demo trading platform and see how exactly when you take the buy position near that of the initial low, you are able to participate in the swing trade and earn money from that of the market. Now these are all the market timings. So Japanese session gets over by 7:30 GMT. 7:38 is the gap time before the start of the European session, and 8 to 14 GMT is the European session. 14 to 14:30 is the gap time before the start of the US session, and it is US session starts by 14:30 GMT and ends by 21:30 GMT. And the remaining time before the start of the next day will be the gap time, 21:30 to 0030 GMT. So during the gap times, they make the false move, and that will indicate what sort of moves they are going to do it during that of the session. So any doubt you can ask me. I'll be willing to answer those questions. So I have given the forecast for this week, and we will review the forecast on 13th of January by Friday, 5 GMT, and see how exactly the market has moved, whether it is moved in line with the expectations or against. So I'm displaying the forecast slide now. If you want to ask any questions specific to that of the currencies or about the general market, you can ask me. I'll be willing to answer those questions. Satish. And what is MA, the moving average you recommend for intraday trading? As I explained many times, that I stopped using all the conventional statistical analysis. I only follow the live market code page, and with the help of the live market code page and the net changes, you'll be able to find out what is going to be the next type of move. And as I explained that the type of moves are very important, and that specifies the time or the duration they are trying to follow for making such moves. For example, stop ins and the false move, they do it for less than 30 minutes. If you notice it, how quickly they made the downward stop in the case of that GBP, and from that of the initial low, and also in the case of Canadian dollar, also in the case of CHF, then in the case of USDN also. That was a very quick move, and then they come above that of the initial low, and that indicates what is going to be the next move for us. So after that of the stop and or a false move is the one they come up to that of the low and rise, or up to that of the high and then come down. So in the case of Australian dollar, they've done almost like a false move, coming up to that of the initial high and come down below that very quickly and stay below that of the initial high for 30 minutes and start coming downward. So that will indicate the specific type of moves the players are expected to make rather than the moving averages, because the volume changes from time to time, and our conventional statistics invariably does not give importance to that of the time frame. No, we only follow the time in the form of the 30 minutes chart, 1 hour chart, 4 hours chart, like that. But exactly from which time to which time they are going to make an upward move, from which time to which time they are going to make a downward move, that does not indicate. So keep in mind that the players are manipulating the market. If the market is not manipulated, our conventional statistics will be able to explain to us what is expected to happen. But since technicals and suddenly reverse the market and say that it is due to fundamental, the market is reversed. So if you follow the technicals, then automatically there is a great chance that you could be trapped when this gives some event pertaining to the fundamentals. So in order to avoid this sort of traps or the intraday trend reversals, the best thing is follow the market reading technique. Then Aditya, yen pairs are near that low. Should we buy? Trade be considered? Yes. Once you see that, then low is not being breached for more than 30 minutes in the when euro is near that of the low and not breached, or probably making a brief downward stop, and euro yen coming to the low and stop cutting the new low for more than 30 minutes, you can take a buy. Then it will start gaining the level. Keep 50 pips hedge order, and once the position makes profit, keep stop at entry and then try to maximize the profit. Any other question, please? And Satish, if you follow the timing you have mentioned on the slide, do we need to watch on 30 minutes chart? See, for the past 19 years, I stopped watching the charts. I'm still successfully making the trades irrespective of the market condition. So now you can understand, gazing at the chart, we assume that it will reduce our increases our uncertainty. And invariably, when the market is consolidating in the chart, you will find the chart will get magnified. So the chart will be just showing the magnified 20-30 pips spread. And suddenly, when there is a quick upward move for 50 pips, then the chart will show a very big upward mindset or trigger your sentiment. And immediately you will go in for a breakout trade. And then later on see that that is a final rise or a stop point before making a drop. So by looking at that of the chart, many of the traders think that they can go in for a breakout trade. You find, if you remember, that were giving the calls pertaining to the breakout trades. They say that the support is here and the resistance at the lower is resistance at the higher level, and if they breach the resistance and stay there, you just try to take a buy as a breakout trade, and invariably the players started making the stop and near above that of the resistance and then come down. So quick upward stop, and if we try to do a buy and sell trade, if we don't exit out of the position will be making loss. So understand the quickness and the slowness of the moves. Whenever they make a pip by pip move, and that is the intentional move. Whenever they make a very quick upward or the downward move, it is a false move. That they do it in order to change the market sentiment. And also, people might be thinking there is an aggressive buying happening in the market. That's why Euro and GBP have gone up after that of the breakout news. But actually, if you watch carefully, they will simply dump it and come down. On Friday, you would have noticed that when non-farm payroll was announced, when it was less than expected, they made a very quick rise. And people thought that, okay, non-farm payroll is less than expected, so Euro and GBP are expected to gain, but they simply dropped it. So that we need to understand. Only then you will be a successful trader. Otherwise, you will be sentiment-driven trader, and market sentiments continue to change, and you will be really confused. And at the end, after losing all the money, you will simply say that market is crazy. It is not the place for me to make money. And that's all sort of conclusions, or simply say that I am unlucky in trading. These things are just expression of your inability to understand what is happening in the market. And also, many of the players or many of the analysts, they know very well that technical analysis is really not helping 100%, and still they try to follow it with an ulterior motive. Probably they are also facilitating the players. So we have to understand, when they are giving it free of cost, understand the integrity pertaining to that of the analysis. I'm not trying to blame anybody, but I'm trying to caution the traders, because after following all those things, you are only betting your money. So I'm making you to become cautious. Be aware of what is happening in the market, and then try to use your common sense also in understanding the market. That way you will not be losing money blindly. So buying after the rise, selling after the drop, they all appear normal trades when you follow technicals. But when you use common logistics, it will say that that is not a wise trade. Is there any other question, please? Okay. I'll conclude the webinar. I take this opportunity to thank FX Trade for the facilities provided to present the webinar. and wish you all happy new year and wish you all prosperity in your trades and profitability, and also see that you are not emotionally disturbed during that of trading. And once you are calm minded, you will be able to really see the logical reasoning, and that is going to be the ulterior guideline for successful trader. Wish you all the best in your trades. I'll come back on Friday and review the forecast what I given it today. Wish you all the best in your trades.